Hello and good afternoon. You're watching Closing Trades on ET now, and the closing trades are looking healthy as we speak. Individual stocks is what is doing okay, though, even though it's the Nifty which has actually just moved into the red in the last few minutes, but still 21,600 has been maintained, even though we're off the highest point of the trading session by almost 100 points, close to the lowest point of the trading session. It's Bank Nifty that is powering ahead. It's high by almost 1 percentage point. Kotak Mahindra Bank came out with a good set of numbers in the sense that the net interest margin held at around 5.22%, which is better than street expectation. So that stock is surging in the trading session, and it did have a bit of a rub-off impact on ICICI Bank, whose numbers we are still awaiting, because that stock too managed to clock towards the highest point of the trading session. Talking about some more result reactions, Union Bank of India just reported its numbers in the last 20-30 minutes. That's seen a thumbs up coming in from the street. You also have JK Cement, wherein there is a stark improvement in profitability and the margin picture. And that's the reason that stock too has seen a sudden spike. Bharti Airtel too is in focus on account of the IPO perhaps of one of the subsidiaries. So we are watching out for what's really happening there. But it's all about the public sector entities yet again, Aisha. And across the board, whether it's a railway stock, whether it's a power company, all of them are up anywhere between 5 to 20%.
Oh yeah, chugging along just so smartly right now in trade. In fact, that's been the traction throughout this week. I mean, even if you were to stack up some of these names with their 1 month chart, it's not going to look as staggering as how the move this week alone has been. Look at IRFC. For 2 consecutive trading sessions, it's been making a move of nearly double digits. And I want to just bring up the 1 week charts for all these names. RailTel, 25.5% up move. IRFC is the next one which should come for you on your screens. That as well has given a very, very smart move in excess of 64 odd percent or so. IRCTC, I think 75 odd percent is the kind of return that you've made on IRCTC alone this week. Okay, I stand corrected there, 9.25%. But some of these names, of course, have been looking very, very smart, and RVNL as well being the other one in trade. That said, the entire power pack as well has been doing very well, like Anisha just flagged off, and all these spaces are looking very, very buoyant indeed in trade. There's, of course, names like SIS as well. They've bagged a contract for the security of the Ram Temple in Ayodhya. That is another stock which has been holding up and, clearly in focus. Kotak Bank just came out with its numbers, and look at the stock and the kind of fillip that it's got. It's holding up 2.5% in trade and now clocking almost 3% of a gain coming in. There's Unilever. That, of course, continued to be a soured one from the word go, hasn't seen much of an improvement, continues to be a drag. And, brokerages have now cut their price targets as well on Unilever after its numbers. CLSA, for instance, has cut the target price to now 26.37 from the earlier 28.23 thereabouts. HSBC has downgraded it to a reduce from the earlier hold. So that's really the state of the market. Let me now welcome on board Rahul Shah, Kunal Bothra joining in on the show to dissect which way we are headed next, considering next week, as elongated this one was, but next week is going to be an acutely truncated one. Kunal, what's the take then, looking at how the market construct has been over the last 6 days?
Well, yeah, I think it's been a bit of chop and churn for the indices as such, because there is no real movement on the index except for that heightened bit of volatility. The India VIX coming back towards 14. In fact, midweek, we had touched even levels of 15 plus for India VIX at one point of time. So I think except for that higher bit of volatility on the indices, there is no major trend as such. But then on the sectoral front, as I think you guys were pointing out, many of the PSU stocks are looking attractive. In fact, the PSU banking names, which are the ones which are the only underperformers left in the entire PSU baskets, even these stocks have now started to show signs of a breakout. So I'm expecting that hopefully in the next couple of days, we might see the PSU banking lot also trying to participate significantly on the upside. But net no major view on the indices, and expect this range bound choppiness move to continue for some more time.
Okay, range-bound, choppy move expected to continue. But comment on the charts of some of these private banks, Naresh, which are actually perking up today.
So, interesting information that post HDFC numbers, we've not seen a sell-off continue in most of the private banks. And Kotak Mahindra Bank, after some volatility, is at least flat for the day, a little bit in the positive, and holding on above the 800 mark. And now the next trigger could be what happens with ICICI Bank numbers. If that comes out positive, that could be a change, so that the market expects it's just a one bank number issue this season, and crossing 1,020.25 would be an indication that ICICI Bank is out of the woods again and gets into fresh momentum. So same as the case with Axis Bank, which has been holding above the 1050, 1080 mark. So a lot of private banks are holding up, whether it's a small IDFC First Bank or a large ICICI Bank. Post the numbers, we would get more clarity with price action. But overall, the bias till now is positive.
The bias remain positive for some of these banking names. Let me bring in Rahul Shah also into the discussion. Rahul, your reading of the Kotak Mahindra Bank earnings that we saw today, because they are hinting at some challenge in terms of deposits.
Hi, good afternoon. I think if you look at the private sector banks, I think Kotak was a little bit better than what we saw of HDFC Bank, and what it looks like. I think the numbers were in line, fairly in line with what the street was estimating, and that's why we saw some good cheer up in the post number. The stock has done quite well. So I feel that I think more clarity and more discussion post the con call would be better on why the challenges on the deposit front. Will able to comment on that.
Okay.
Right. Okay, we're going to take a very quick break. Then on that note, still awaiting ICICI Bank's numbers. But yes, the stock, of course, is holding out a good 1%. In fact, it's at the highest point in the day, well above the 1,000 rupee mark, ahead of its numbers. ICICI Bank is what I'm talking about, and will just come off you on your screens. Kotak, of course, is already done and dusted with. We'll take a very short break on that note. When we come back, more on the markets. Back with closing trades right here, ET now. Flat for the index, but you've got Kotak, ICICI Bank, SBI, Bharti, and even HDFC Bank as well. While it may have cooled off from where it started off in trade, but it's 0.7% higher still, so it's maintaining its green in that sense. What's IndusInd Bank up to? That's really not seen much of a respite after that 4% crack that the stock saw yesterday. Today too, it's down about almost 1.5%. L&T, ITC, Axis, Reliance Industries, all these stocks are in the red as we speak right now. Kunal, this week particularly has been quite tricky for private banks, right? First, it started off with the reaction in HDFC Bank. IndusInd Bank, inline set of numbers, stock got beaten down. Today, of course, Kotak is well in the green. ICICI Bank still awaited. What can you draw up in terms of a trend here?
So there's definitely not too much of liking towards the private sector banks, because even though I think we saw the stocks for HDFC Bank and IndusInd Bank seeing some bit of intraday recovery today, HDFC Bank also seeing some intraday recovery, but there's no major change in the data in terms of open interest so far. Now that indicates that the traders who have shorted the stock a couple of days back, especially when the news flow started off to be positive or when the stock opened with a gap down, they have still maintained their positions largely into the stock price. So either they'll wait out for the expiry or we may see some changes in terms of rollovers. Now, ICICI Bank had been an underperformer over the last 2-3 months. So maybe I think in that regards, maybe the stock can remain a bit more plateaued at current levels of 1,000 odd. But we need to see that how post-reaction, post-results, whether the stock again gets into a very similar kind of inline performance with respect to prices where you saw HDFC Bank and IndusInd Bank correcting. If that happens, then I believe that ICICI Bank may come back towards 940, 950 mark. But if it doesn't break below or doesn't fall too much below the 990, 985 support, then I believe that there could be a chance of a decent recovery, just like what we saw for Kotak Bank. But when largely, we are looking at a mixed reaction across the private sector banking names. No major trend emerging on the upside, at least for many of these stocks.
Okay, so no major trend for these private banking names on the upside. The Nifty has slipped below the mark of 21,600 now, very close to the lowest point of the day. But one space which is powering ahead is the entire tire stocks. Take a look at SEAT. That stock is up in double digit. Apollo Tyre has seen a spike of almost 6%. MRF is doing quite well for itself. Balkrishna Industries is holding on to gains. So a lot of these names actually powering ahead. Rahul, what's your view on the tire sector and the preferred bets there?
So I think if you look at it, I think the crude prices have been quite stable and for last couple of months, and in fact has fallen, and the main raw material for the most of the tire stocks is augurs well for them. And secondly, I think most importantly, if you look at it, the two-wheelers or the four-wheelers, the entire auto as a sector has done quite well. So, and I think post that we've seen that the entire ancillary to that, most of the auto pack has also done well. So I think the clear winner is two things. One is obviously the demand coming back into the entire auto pack as a whole. So if we look at two-wheelers numbers or the four-wheelers numbers have been strong. So I think obviously which is followed by the tire stocks as well. So I think obviously they are undervalued. And if we look at one more trend among most of the in the markets, if we look at it, I think important is I think the stocks which are available at reasonable valuations, especially in the mid caps, they have been getting fancy again with the higher valuation in a lot of stocks which is there. So I think this sector has been underperformer if vis-a-vis other sector. So maybe just catching up with that. So I think entire sector is just getting a re-rating in that.
Right, okay. Well, despite Indian markets being open today and a long trading week, it's a non-working day for mutual funds. Sneha is here with updates on the same.
In a surprise move by the exchanges, markets are functioning today and will remain closed on Monday on account of the Ram Mandir inauguration. But what about the mutual fund space? What's that space doing today? Well, despite markets having a regular trading session today, the mutual fund market is closed since Saturday is a non-working day for mutual funds. Now, mutual fund houses will not be accepting any applications, neither will any redemption of units take place today. All redemptions coming after the cutoff from Friday, the cutoff time being 1:30 p.m. or 3 p.m. based on the type of fund, till Tuesday's cutoff time will be paid based on Tuesday's net asset value or NAV. Another key thing to note is that the SIP space will also not be seeing any action today. So in a nutshell, the mutual fund market is closed in action today.
Okay, so the mutual funds are shut. The inflows and redemptions both won't be taking place today, and the value of your NAV will be adjusted basis Tuesday. But in terms of the other stock moves, of course, you have names like RVNL, IRFCL, which are doing quite well. Ireda actually came out with its earnings. That stock is up almost 10% post the earnings as well. SIS India is the other one which is surging 10% ahead. We spoke with the management as well live from Ayodhya, and he was talking about how they are taking care of the security procedures, and they are the one who have been impaneled as far as the security of the temple is concerned, post of course the inauguration, which is on 22nd January. In fact, we'll do one thing, we'll slip into a very short break, and as we do that, listen in to the management bite from SIS.
The larger role for SIS, the greater deployment will start after 23rd, once the paramilitary forces and other special arrangements are withdrawn, and we have to run it on a routine basis beyond 23rd of January. So SIS has not just deployed manpower, but we are also using high-end technology like body-worn cameras for management of devotees as the queue, etc. We are using artificial intelligence-based video analytics, supporting the UP police, such that the CCTV camera footage can be analyzed for detection of various things. So there's a whole lot of high-end security arrangements that SIS has prepped for this mega site and mega event. SIS is very much on track to move back to the 6% margin range. It will happen step by step, but this quarter's result will be a step in the right direction. In addition to that, to create shareholder value, SIS has just concluded a buyback.
Hello and welcome back. Well, for the markets, overall we are continuing to see a bit of a pressure, but 21,600 is something that we have broken for now, and we are not seeing recovery from there. But the Bank Nifty is sitting at the highest point of the trading session, a 400-point surge as far as that is concerned, and PNB is one stock which is powering ahead as we speak. From the broader market, it continues to be the PSUs as well as some of these tire stocks, and some of these Adani group of companies are also seeing a bit of a move. So Adani Transmission, Adani Green, all of these stocks are actually seeing a bit of a spike. Naresh, your view on some of these Adani group of companies and any chart that looks interesting worth highlighting?
Teams have seen a bounce in the day, but it's tough to trade them given the volatility. But overall, if you look at the most trending names, it continues to be Adani Ports, which has been a strong name over the last few weeks. So a strong trend there. And if one wants to go a little more on the riskier side, one can look at Adani Enterprises itself. That could see some bounce towards 3100 mark.
Okay. What's really been on a tear, of course, are the railway names, IRCTC, IRFC, RVNL, RITES, etc. They're all holding out just very, very smartly. They are the ones which are really gaining ground. On the flip side, haven't seen much of a recovery for Unilever and IT, which actually began a solid move after TCS's and Infosys' numbers last week. They're the ones which have abated a little bit. Kunal, the two trends here. First, let's pick up on IT, and what do you see as a move for Nifty IT here?
Well, I think the large cap IT names, the likes of Infosys, TCS also to a larger extent, they still look quite strong. In fact, these stocks are just 1.5% off from their 3-day, 5-day or 2-week swing high. So I believe that it indicates that there's a lot more strength into these stocks as compared to many of the other larger cap sectors, which are larger cap stocks, which are down somewhere around the 5% to 10% range for themselves in this last 2 weeks of market volatility. Now, Infosys particularly, I think that stock is still trading above the key moving averages as well as the key support. So there were two gaps which were formed on the stock post results. The first gap support for the stock is around 1525, the lower end of the gap, and the second is closer to 1600, 1610 mark for Infosys, which means that these are the two strong support levels for the stock. Same is the case with TCS also. So I believe that both of these charts are stronger. Even Wipro, I think, has come back towards a good support point at 475, 477 after that strong single day up move. So I believe for a trader who's looking at buy on dips at current levels and who has a time frame of 1 to 3 months can look to enter these stocks.
Okay, let's just pause for a bit, and the biggest voice coming in from the World Economic Forum at Davos, the forum's president, he's in conversation with Times Network managing editor Mihir Bhatt. Here's a slice of that exclusive chat.
There is a lot of talk about tariffs, protectionism, friendshoring, nearshoring, and decoupling. But still last year, trade globally did grow. It grew with 0.8%. That's a lot lower than the trend growth, of course, for the 2030 last years. And trade used to be the engine of growth. But this year we do expect 3% trade growth. So even with those measures being taken, there's still growth, but there will be no real economic recovery without the trade and investment recovery. And we're not there at the moment. So we were very worried about the tariffs and protectionism and industry policies. But no, I think we're more worried that the growing trade growth and investments can be hampered and by the geopolitical conflicts. We have challenges already in the Panama Canal that is not related to conflicts, but it's climate change and it's like access to the canal. But no, if you have these disruptions going on also in the Suez Canal, that is like the bloodline for many nations, including India. It can lead to also higher oil and gas prices. And if we end up with higher oil prices, that's very bad news for the global economy too, because big emerging economies that are growing substantially are big importers also of oil. Look at India, look at China, net importer of oil, and in China they are trying to revive growth again. Of course the growth is great in India, but I don't think anyone in India wants now, also in the run-up to elections, much higher oil prices.
That's true. India has been pulling a lot of weight on a global stage in terms of economic growth, and it has remained the fastest growing large economy for quite some time now, and China's growth somehow refuses to revive. What is your view on India, its growth prospects, and the increased influence and responsibility that India has on global stage?
So I'm very bullish on the Indian economy. I have to say that. More than 7%, I think, this year. And India is well positioned to continue this. It's a $3 trillion economy today, and that is not enough for a country of that size.
Correct.
So there's, of course, a lot of catch-up, but it has now a momentum that is incredible. And India has also two things going for it, of course more than two, but if I'm going to underpin two things. One thing is that digital trade is like 15% of the global economy, but it's growing twice as fast as the rest.
Yes.
And India is pretty well positioned here. Second is that services are growing also much faster than the traditional goods. Very good for India. If I should add one thing, if I may,
Yes, please.
would be, of course, India has also benefited from the friendshoring and diversification of supply chains. If you look a few years back, there were 0 iPhones produced and manufactured in India.
Yeah.
India was never the manufacturing hub of the world. That was China and maybe Vietnam, but India was the services. But no, I heard during this meeting, I haven't really checked it, but I think it was a good source, saying no, 25% of the iPhones will now be produced in India. And that has just happened like this. So there are then nations that chooses India. And of course, India-US relationship is pretty good. And that
It's good for the world as well.
so I know it's very good. U.S. is the largest economy in the world, 25%. And then India is seen as a friend by American industry and the American administration, and that's why also you will see some more friendshoring there. So India is in a way benefiting from what has been a soaring relationship between the U.S. and China. I think there is a little bit better now after Biden and also Xi Jinping met. And of course, India is in a very difficult balancing act here too. I don't necessarily want to elaborate on that, but I think it's challenging, but it's handled well so far.
Back with closing trades right here in 80 now. We're still holding on absolutely flat actually for the Nifty, but I think the traction is outside the index once again. It's the broader markets. The mid-cap index once again has managed to hit a fresh high for itself. And look at the move that you're seeing across the PSU pack. Just pick up any of the themes and they're all holding out very well. And today, much like was the case all throughout this week, it's being led by power as well as the railway names. But let's welcome on board Ajay Bagga as well and figure out what he's making of the market right now. Ajay, hi, afternoon. Very rarely do we chat on a Saturday, but glad that you could take time out and speak with us. What's the market screen, Ajay, telling you? Because the mid-cap rally continues unabated and some very sharp earnings reactions, be it on the positive side by the IT big boys or on the negative by an HDFC Bank or for that matter, even IndusInd and Unilever.
Yep, Aisha, quite surprising moves. Actually, if you see, and most of the impact has been due to the FI moves. 23,000 crores being sold in these first few days, which was a surprise. We were not expecting sell-off by the FIs, and especially not of this magnitude. Maybe it's related to some of the Chinese, the Chinese money or the foreign money invested in China getting withdrawn, and we being a collateral damage within GEM funds. Maybe some part of it was that. But I don't think fundamentally the earnings were that bad for the banks or were that good for the IT companies to see such sharp reactions. Today's been a boring day overall and can't really complain. We are getting a Monday off, but I think today could have been just kept as a disaster recovery day and those limited hours done. It was a force fitting of a trade done today, and I don't think we'll have very high volumes today. So not much to read from the tea leaves today, but looking at January as a whole, US market now is clambering through. We have seen a lifetime high coming on the S&P 500. So after that 16% move in the last 9 weeks of 2023, we saw a flattish to downwards US market. And in this week, it has finally started regaining its foothold. I think that will have a concomitant impact on emerging markets as well. We should benefit from that return of some risk appetite. But the FI sales and the magnitude has been very surprising.
FIS sell figure has been quite, surprising. Of course, we have seen to the tune of 10,000 per day for the last couple of days. Just yesterday, I think it had ebbed a bit to almost 5 to 6,000 crores. But LIC is the stock that I want to discuss with you, Naresh. We have seen a bit of a breakout there. Of course, it had hit past the level of that 900 rupees in this week, and now it's inching very close to that issue price of 949 thereabouts. A big breakout in the making.
The day of the listing, that day the stock price has made a top around 920. So out here it becomes a case wherein it could slowly and steadily head up. One could be looking at building positions on dips all the way from 870 to 920 levels also. So going forward, I would expect 870 to 860 to become a base for the stock and slowly and steadily go up. And the volumes in this rally from 600 to 900 have been pretty strong. So indicates a new trend has started for the stock, remains a buy on dip.
On dip, that's a view coming in on LIC. HUL is the other one which is a bit under pressure today, a 4% cut. What did you make of the earnings on this one, Ajay? And overall, it seems like that the earnings season has been a bit more tepid versus the consensus expectation.
Yeah, quite tepid, and especially FMCG, we are seeing a volume issue. Volumes have still not started picking up as much as they should have in this part of the cycle. Overall sentiment is strong, but the rural demand remains muted. And, the monsoon impact on the rural demand is very evident. And despite premiumization working on the higher end for FMCG and for consumer-focused stocks, the base of the pyramid has still not really recovered. And that we are seeing in terms of sluggish volumes. And that's something probably that will stay for the next 6 months. We'll have to watch for this year's monsoon. And hopefully there is not a multi-year impact of the El Nino. That remains a worry. There is a safety net in terms of food, in terms of minimum basic income being given to farmers. So that is helping. But that's not creating the rural demand. And we are seeing that, be it in two-wheelers, be it in tractors, and be it in the FMCG sales, which the volumes are still a drag. And that's what we saw in the leader as well.
Absolutely. Counting down to ICICI Bank's earnings, though. Shortly, we'll just pull up what the street as well is expecting and get you a preview of those numbers. 1% higher is how the stock is actually going into its earnings. Although it's had a bit of a choppy ride, saw a bit of a dip down, and from there, it's actually escalated. In fact, we have Gaurav with us to tell us what the ET Now poll is penciling in.
Yes. So ICICI Bank will come up with the results today, and let's see what consensus expect from the result. So if we talk about operational data, net interest income is expected to increase almost by 12% on a YY basis. PAT, which is profit after tax, is expected to increase almost by 20% on a YY basis. And this positive surprise can be because of the lower provisions that street is expecting from the bank in this quarter. If we talk about pre-provisional operating profit, they are expecting this to increase only by 8% on a YY basis, because we may see some kind of increase in the cost of funds for the bank in this quarter. This will also put some kind of downward pressure on the NIMs, and that is why they are expecting NIMs to decline almost at 10 to 15 bips, and they may come somewhere in the range of 4.3 to 4.4 bips for the bank in this quarter. Let's also not forget that they are expecting CASA ratio also to decline, and this will also put some kind of negative pressure on the NIMs. But for the bank, LDR ratio is lower than its peers, and that is why we may see some kind of cushion in the NIMs coming up from this ratio. And talking about the asset quality, slippages and credit cost is also likely to remain stable versus what it was in the last quarter. That means that they are not expecting any risk to the asset quality for the bank at least in this quarter. But from the call, let's look at what consensus and what we should look for the bank. So we should look on the commentary which is coming up on the deposit monetization in this quarter. Let's also look at the commentary on the NIMS, how bank thinks that the NIMS trajectory work from here on, and let's also see how they believe that the CASA will shape up from these levels. And let's also look at any commentary coming up on the loan growth trajectory that could be there for FY25 for the bank, because this will decide the profitability from the bank from here on. Lastly, let's also not forget that they're expecting NIMS to decline. I mean, the management is expecting NIMS to decline, but likely to be stable if we compare it with the FY23 levels. That is why let's also look out at how NIMS will shape up from here on.
Okay, so that's the expectation from ICICI Bank any minute now. But for the markets, we have taken a bit of a knock, especially for the Bank Nifty. We were trading comfortably above 400-point gain. That has narrowed quite a bit in the last few minutes, though we are now catching back up. And even for Nifty, we had taken a bit of a slide. We had reached that level of around 21,550, but now there's a bit of a recovery from there. Kunal, but within the entire tire space, wanted to get your perspective as to which is the chart that looks the strongest right now.
Well, I think right now many of these stocks have managed to buck up as well as see a lot of recovery for themselves. For example, MRF of course was one of the most stronger one from the entire tire space. We saw Apollo Tyres. I think there was a bit of a rough patch at the 400 mark for the stock. A lot of volatility, 10-15% kind of a gap down move for stock prices. But then the recovery for Apollo Tyres and the breakout this 500 mark recently has managed to lead the stock into a much more stable uptrend. JK Tyres was one of the few mid-cap names, non-FNO stocks, which has also seen a good recovery from I think 350, 375 mark earlier to now 450 plus levels. CEAT was the only one. I think the stock, if I'm not wrong, is up some 17-18% today so far. So very good recovery for that stock as well. Only Balkrishna Industries is the stock which has been lagging a bit behind as compared to most of the other peers when you look at the last 3 months, 6 months, 1 year comparison. So maybe that's the only stock where I believe a decent catch-up could be at play.
Okay, that's the view coming in on the entire tire space right now. Apollo Tyres, of course, leading the charts with a 6% move. There's Balkrishna Industries as well, 4.5% higher. And then MRF as well, which is moving very smartly, about a 4.25% move coming in there. Ajay, what did you make of the commentary coming in from the IT majors and, the large services plays? It's been a bit of a mixed bag, but would you think the worst is behind us?
Yeah, looks like, Aisha, the worst seems to be behind definitely, but the recovery will be slow. As you saw from the order books and the commentary of sluggish order flows coming through, margins are not that great. And expectation is that it could take 2 quarters to 3 quarters for normalization there. What will be critical is how soon can they get onto the bandwagon of things like generative AI and using machine learning. I think those are the things, the value additions that the market is looking to reward. But worst is definitely over. Under-owned sector with a lot of underwhelming expectations. So when the market saw a plateau, we saw a pretty sharp reaction. Now, I think it should go more sideways and more sober moves. The good news is that the US markets are moving on the big tech and the semiconductors. The Taiwan semiconductor numbers came out very good for TSMC. So overall, the tech complex looking good. There will be derived demand.
Ajay, just to interject there, Kotak Mahindra Bank's management is speaking regarding their earnings. Let's listen in.
May I request Jaimin to take us through the numbers? I look forward to interacting with all of you on a far more regular basis going forward.
Thank you, Ashok, for your remarks. Jaimin, may I request you to take us through the numbers?
Thanks, Rohit, and thanks, Ashok. The board cleared the Q3 results for FY24 earlier today. Let me take you through the bank's standalone numbers first. We closed this quarter with a post-tax profit of 3,005 crores, which compares with 2,792 in the same period last year. This quarter, we had two difficult hits in the bank standalone. The first one is we took 190 crores of hit on account of provisioning towards the AIF investments. This is in line with the RBI circular, which came out in December last year. The second one was on account of trading in book, where we have a fixed income book, net of OIS. We took a hit of 168 crores in this quarter. This is where a strategy where we lock in spreads through swaps, and we do go through volatility in the interim periods, but there is a locked-in spread over the life of the asset. Last quarter, if one notices, we had a profit of 150 crores. This time we have a negative 168. So that has swung the tide in this quarter. On an overall basis, we've seen the NII at 6,554 crores this quarter, which is about 16% higher than what we did in the same period last year. The net interest margin at 5.22, which is same as what we clocked the previous quarter. Our fees and services at 2,144 crores is about 27% higher than what we did in the same period last year. The distribution income as well as the other general banking fees contributing both about 27% each. On the overall expenses, we finished the quarter with total cost of 4,284 crores, which is about 14% higher than what we did in the same period last year. This quarter, we had heightened costs on promotional spends in the festive season, both Diwali and Christmas. The employer cost also had a tad hit on account of increased retirement benefits and stock-related cost. On the overall pre-provisioning profit, therefore, we closed at 4,566 crores, about 18.5% higher than what we did in the previous period. Our GNPA numbers currently at 1.73 compared to 1.90 a year ago, with an overall GNPA of 6,302 crores. Our net number now at 0.34 as against 0.43 a year ago. Provisioning coverage, therefore, at over 80%. SMA2 again contained at 210 crores, which is outstanding. So people who are 60-day overdue with exposure of over 5 crores. On overall advances, we closed this period with a book of 3,72,000 crores, which is about 19% higher than a year ago and about 4.3% higher than what was there a quarter ago. We also do credit substitutes, and if I add total customer assets, which is advances plus credit substitutes, at just over 4 lakh crores, we are 17% higher than what we were a year ago and 5% increment over the previous quarter, which is not an annualized number. Our sweep deposits, on overall deposits, we have seen the growth with CASA continuing to be healthy at 47.7%. The active money, which we had introduced sometime in May, June this year, continuing to grow, and that contributes another 10% of our overall deposits. The active money has seen a growth of about 13% on a sequential basis. At the bank standalone level, we continue to have healthy capital ratios, 21.2% overall capital with CET1 itself of 20.2%, with ROA for this quarter at 2.2. And if I look at the YTD 9-month number, it will come to about 2.48%. At the consolidated level, we closed this quarter at a post-tax profit of 4,265 crores, roughly about 7% higher than what we did 3,995 crores a year ago. Again, taking the hit from what I went through for the bank. The other key contributors to the consolidated profits being Kotak Securities at 306 crores compared to what they did 241 crores in this quarter. Interestingly, Kotak Securities has seen its overall market share go up from about 5.8% last year to 10.3% in this period. Kotak Prime brought in 239 crores of post-tax profit on the back of increase in the loan book. The car finance book itself has grown by about 30% on a year-on-year basis.
Okay, so that was the management commentary from Kotak Mahindra Bank. They are saying that there is the challenges now how they scale up Kotak Mahindra Bank going forward. Of course, there were a couple of specific hits during this quarter. 190 crore on account of provisioning for AIF investments. There was a 168 crore hit on account of the trading in the FI book. There were heightened costs as well on account of the festive period. So the advertisement costs were a bit higher, and overall they've closed the advances book with a growth of around 19%. So that's about Kotak Mahindra Bank. Last 4 minutes of the trading session, and finally the last 4 minutes of the trading week. It has been clearly a long one. But Ajay, if I had to ask you one space which still looks positive with respect to entire risk reward, which sector or stocks come to mind?
I think infrastructure, railways are running up in anticipation of the budget. It's a normal budget kind of reaction, even though it's going to be an interim budget. But people are looking through the May event to the June budget and kind of extrapolating it. So infra, capital goods, railways, defense, I think these continue the march on. And overall, the PSU segment, I think all public sector companies are getting a bid up.
So infrastructure is the big sector to watch out for. Kunal, within infrastructure, L&T, that has been fairly quiet. Do you expect some sort of a breakout there? Because obviously the stock had hit the record high level, but from there, it's petered down a bit.
I think we are into that phase, Anisha, where the large cap stocks, even though they have shown signs of breakout, would not get into any kind of a major follow through. So I think even though L&T has managed to break past about the 3600 levels, which is a mild consolidation breakout for L&T, but then the stock has been unable to surpass with higher degree of momentum, at least like what we saw in the last 2-3 months, where the stock post breakout used to see rallies of at least 4 to 5% in a matter of few trading sessions. So I think we would probably get primed towards this kind of a behavior from the markets, at least for the next maybe couple of weeks, till the time the index trends don't stabilize. L&T in terms of short-term charts has a good support at 3500 levels. So I believe that largely it could fluctuate about 3600 mark, but in case if there is any kind of a dip or an opportunity to buy, I think 3500 could be a good zone to buy the stock.
Okay, so 3500 thereabouts is where you can look at buying that stock. But on that note, gentlemen, we let you go. Naresh, Kunal, as well as Ajay, thanks so much for making time and speaking with us, and have a nice weekend or whatever is left of it. And of course, Monday, which is finally a trading holiday for us. But how are we wrapping up today as well as the week? Well, for the week, we have seen that Nifty has slipped almost 1.5% below the 20-day moving average. You also have mid-cap index, which has actually managed to advance for the week. So then it's at record high level. 4th consecutive week of advances there. The small cap index, however, is a bit in the red. For the week gone by, Bank Nifty has slipped below the 50-day moving average. It's down almost 3%. Bulk of the decline on Bank Nifty is, of course, on account of HDFC Bank, which managed to slip a solid 8 to 10% in this week itself. PSU banking space, that was on fire. In fact, that was the top sectoral gainer with a gain of around 3% for the week gone by. Today specifically, it's the public sector entities which are actually doing quite well. IFCI, Realtel Corp, RITES. You also have NHPC, RVNL, IRFCL, IREDA, all of these stocks ending with a gain of around 9 to 20%. A lot of result reactions. Of course, the big ones were Reliance, HUL. These were the stocks reacting to their earnings. Kotak Mahindra Bank came out during the day with a decent set of numbers. That saw a thumbs up from the street and had a bit of a rub-off on ICICI Bank as well. Tire stocks were also fairly active. So a CEAT, Polo Tires, a Balkrishna Industries and MRF. These were the stocks that were trading comfortably in the green, and towards the end of the day, Adani group of stocks also saw a bit of a spike. So Adani Transmission, Adani Gas, Adani Energy, these were some of the stocks in the green. But then there were losers too. Case in point being Tejas Networks. It was a weak set. The losses expanded. That stock was down 6%. CSC was down almost 4%. HUL, as we pointed out, ended the day with a cut of around 3 to 4%. Policy Bazaar, J&K Bank, as well as Jindal Saw were some of the names in the red. Overall, for the sectors and index today, well, it was of course the public sector entities that were doing quite well, but then you had other sectors too, the likes of metals, media, financial services. These were the ones which were in the green, while autos were on the back foot. Pharma came a bit under pressure. Real estate, on account of that CLSA downgrade, was also a bit red in the trading session, and then FMCG, led by HUL, was down and out. But that's how we are wrapping up today. this week as well. Thanks so much for being with us. We'll see you back on Tuesday morning with all the action from the stock markets.